Welcome to the company update on Commodity TV. Fission Uranium is on the TSX listed under the symbol FCU and in Frankfurt under the symbol 2FU. The company explores successfully the Patterson Lake project within especially the RRR project for uranium. The current resource estimate stands at fantastic 81.1 million pounds uranium in the indicated and 27.7 pounds U3O8 in the inferred category with a rising tendency. The cutoff is at 0.2% U3O8 for the open pit and 0.25% U3O8 for underground. Beside the large resource, there are four reasons which speak for the property itself. Its size, shallow, top jurisdiction and most important, the high grades. By 2030 it is expected that the demand for electricity goes by 76%, which means rising amount of reactors to produce power. By today, 439 nuclear power plants are in operation worldwide, and it is expected by 2030 that 322 reactors by then will be operated in addition, and they all need to be fueled with uranium. Well, what makes Fission so unique? Fission Uranium secured a strategic partner from China called CGN Mining. CGN bought into Fission and paid $82 million for 19.99% ownership. In addition, CGN will buy 20% of the annual production from PLS in an offtake agreement and the option to purchase additional 15% at normal industry conditions. RRR, the project of Fission, is the third largest not developed deposit in the Athabasca Basin with the above mentioned resource of 108 million pounds uranium. Not included in this resource is the R600W zone, which has enormous potential. The deposit could be one of the largest uranium deposits in the world with very low production costs in a future mine production. Fission did a pre-economic study, which I want to highlight now. The average OPEX stands at $14 per pound uranium, and the pre-tax NPV is at $1.81 billion, and the after-tax NPV is at $1 billion with a 10% discount. The pre-tax IRR is at 46.7%, and the payback period is only 1.7 years pre-tax. The pre-tax net cash flow over the life of mine is over $4 billion and after-tax at $2.5 billion. The estimated capex is approximately only $1.1 billion. Those numbers are very favorable for such a future production project and is number one ranked with only 16.60 Canadian dollars per pound uranium in comparison in the costs of all other projects. The exploration potential is high, what the current winter drill program shows already in the good results. This winter program targets further resource growth drills and delineation of the R600W zone, expansion of the high-grade R780E zone and delineation of the zone R1620E. Additional exploration drillings target new discoveries as the Haley SIM Airborne Resistivity Survey will do. They plan a summer drill program too for an update of the resource and the economic study, as well as to update the R780E zone and add to the R600W zone. Altogether should lead to a much larger resource estimate this year. Fission has a market cap of approximately 320 million Canadian dollars and has cash after the payments through CGN of over $85 million. The stock is very liquid with an average daily volume of approximately 1.5 million shares traded per day. Fission has 483.9 million shares outstanding and fully diluted around 516.5 million shares. We think this was one of the last capital raises of Fission before this project is sold or together with a large partner brought into production. Fission did everything right and works consequently to build shareholder value through successful drilling and a rising resource. Check it out and thanks for watching us. Bye bye from Munich.